Thank you all for joining us today for this presentation around our preliminary results. If we can just go to the next slide, please. Myself and Charlotte will take you through our prelims, and we'll be providing plenty of opportunity towards the end to take any questions that you might have as well. So if we can go to the next slide. Our agenda today is we're going to take you through what services we provide. I know there are some people on the call who have followed us for a while and know very well and in some detail what we do, and some people who are perhaps new to Driver and would like to understand a bit more about the business. So I'll try and steer a path through those two knowledge levels. Talk about some of the operational highlights. Charlotte will then take us through the numbers, financial performance, regional analysis, cash flow and bridges. Then we'll talk about what we consider the outlook to be for the business for the next quarter, the next year, and the future in general. And of course, there'll be plenty of time for Q&A at the end. So please make a note if you have anything that you'd like to ask us. Next slide, please. Thank you. First of all, a summary of what we're actually doing and where we're doing it. Now, Driver Tret is the biggest part of the group at 51%. That is dispute resolution and claims drafting and defence across the world. Most of our people deliver some services through the Driver Tret brand, something that we've been doing for close on 45 years as a business. And we do that through all of our offices globally. Our driver project services offering, which is indicated by the gold part of the sort of donut diagram, is now only run through our UK operation. We used to have operations like this in different parts of the world, which we have scaled back upon as we've sort of tidied up the business and focused on higher margin work. Which leads me fairly nicely to the Diales business, which is all about expert witnesses in a wide variety of cases, many of which are quite high value and quite complex in different parts of the world. This is where we achieve our highest rates and therefore our better margins. And also on those bigger jobs, we can get longer commissions to work upon, which helps us with our utilisation. So those of you that have followed us for a while will know that we've been building that brand up and up over the last few years to take us forward and improve our profitability, which remains a key focus of the business. Next slide, please. As we move around the world, and this is very much a global business, you will note that there are some differences in the split between our provisions. Over in Americas, you can see that there is no project services work. That business was started about 3 years ago. It's done very well. We started it organically from a standing start with a couple of great hires there. And we only offer our Diales and Driver Tret services. We don't offer a project services offering there. And you can see that most of it is Diales. If you now move over to Asia in the bottom right-hand corner, we have some expert services. We've closed down the project services operation there, and the balance of those services are mainly Driver Tret. We would like to see more expert work in Asia, and that's something that is a bit of a focus because we have plenty of experts who are used to working in that particular region. Covering Middle East next, we have a sliver of project services there, which is mainly jobs that are coming to a close and some project management work in Oman, which, excuse me, is quite limited in its size. A good representation, 25% of the expert work, and the balance being Driver Tret. It's likely in that region that we will always have a significant Driver Tret presence because there's a great deal of claims work to be done before you get to some of the expert commissions. In Europe, which includes the UK in the top right-hand corner, you can see that's where our project services based mainly in the northeast operates from. It runs in petrochemical, oil and gas, industrial projects, pharmaceutical projects, those kind of things. And has had an exceptionally good year this last year. A great team of people there who are delivering some really pleasing results. The balance is our driver Tret business, and we have a significant proportion of that as expert work, as you can see again in the top right-hand corner. So if you've been following us for a while, what you'll see is that we are transitioning to reducing the project services businesses outside of the UK and focusing everywhere else on higher margin dialysis and driver Tret projects. So if we could have the next slide, please. This slide is by no means all of the projects that we've got on across the world. It's a reasonable sample of them. We would generally expect to have at least 1,000 commissions running globally at any one time. And as you can see from this map, they are truly all over the world. There are probably as many locations that are not identified on this map as there are indicated, but in the time available, I think this gives a reasonably representative view of the wide geographies that we work in. We also work in something approaching 20 languages across the globe in delivering these services. We need to work on ways to deliver these more efficiently. And our next slide, I think, shows an example as to how we might go about that. Confidentiality is quite important to our client base, and this particular case study doesn't have, of course, any party names or any project names upon it. But what I'm just going to identify to you here is this is a major dispute in Australia. It involves lots of pipe work and lots of poor workmanship that's claimed to have taken place in relation to that pipe work, and it's worth many, many millions of dollars. We have an expert appointed from the UK who is a world-leading quantum expert, and that person has a couple of assistants based in our Midlands office working on the analysis on this project, and also is utilizing some appropriate resources that were available in both Dubai and Qatar. And of course, we have on the ground some of our local people in Australia assisting as well. So we truly are operating globally. And this model that breaks down the silos that existed in the business beforehand, where we were dealing with these projects regionally, is one of the tools that we're going to use to improve our staff utilization, which is very much a key metric for the business. So that's just an example of some of the sort of culture changes that we're bringing about in the business following the challenges that we had to deal with last year in the Middle East. A couple of operational highlights. We have a new executive board structure in place. Obviously, Charlotte joined that board. We do have a very experienced chief operating officer in Tom Comfort, who's been here for over 20 years. And the other members of that board, Hugo, Paul and Peter, have also been here for tens of years each, in one case over 30 years. So a very experienced team of people. And what we are able to do by using those people in the right way is to ensure that we're improving management and control over all of our remote locations to ensure that they stay on track and that the culture we want to embed in the business is forthcoming. Following the changes in the Middle East, we had a fairly dramatic reduction in headcount from, I believe, 65 to 35 overall, so 30 people exiting the business, a further 11 in Asia Pacific, which effectively significantly de-risks those business areas that have caused us a number of challenges in the past. We've focused, as per the previous slide, on global office collaboration, and having lots of the business overseas working with lots of different areas means that we can improve our utilization across the board. That's already something that started to happen and come through, but it is very much an ongoing project. During the challenges in the Middle East last year, we also lost some testifying experts, 3 in total. However, overall, we've managed to increase that headcount back up to 53 from 47 at the beginning of the year. So a really significant move forward there in terms of the number of testifying experts. These people are extraordinarily difficult to hire, and we need to operate the right kind of business for them to want to work in, and the right situation that allows us to hire those people. We've also noticed over the last few months an improving pipeline of inquiries, including some rather large commissions coming out of Korea, the South of America and KSA. So all in all, very helpful for us to see a higher pipeline of inquiries there, which gives us additional confidence in the numbers that we're shooting for this year as a business. Our main board is also strengthened, not just with the addition of Charlotte as CFO, but as at the AGM in a month's time, we will have Sean Smith joining as our new chair, who we look forward very much to welcoming to the board. Next slide, please. Would you like to?
Yes, thank you, Mark. Revenue for the year reduced by 4% to 47 million. That's as a result of the restructure in the Middle East. Operational loss of 0.4 million pounds. A loss for the year of 2.9. On a later slide, I'll take you through the steps between those and whatever costs there were. Net cash for the year decreased to 4.9 from 6.5, but still a very strong cash figure, given that we returned 1.3 million pound during the year to shareholders as a mixture of dividend and share buyback. Utilisation decreased to 67.5, but that's as a consequence of the Middle East and APAC restructure as well. Given that it was a loss, we've got a loss per share. We did commence at the year end, particularly in Q1, regional and central overhead review.
Yes, indeed. That's last year. Obviously, as you can see at the top of the slide, we're now going to take a look at the first quarter of this year. If you can give me another click, please, Hannah, you'll see that the revenue is in Q1 ahead of budget, 11.8 against 11.2. Another click will, thank you, will show us that the operational profit is at 250k above the budget of 0.13 for that first quarter, which we set. We are expecting a profitable year. I think another click will give us an update on cash, which stood at 4.7 at the beginning of January 2023. Another click will give you an update showing utilisation is now at 70. And if we can have two more, you can see that our interim dividend has been approved by the board, and our overhead reduction plan is not only implemented and in hand, but we have some further savings that we're hoping to achieve over the next 3 or 4 months. They'll come through in a phased way, but Q1 has certainly been a very positive experience for us.
Thank you, Mark. So a breakdown of the overall retained loss. Revenue 47, as I said earlier, cost of sales 37, had a gross profit of 10 million. We have our admin expenses of also 10, and net finance costs were pretty neutral. So that's how we arrived at our operating loss of 0.39. But these figures, apart from a little bit of rounding there on the 0.3, are in line with the trading update that we sent out on the 11th of November. And within there, you know, we're including the we've got the Middle East loss of 1.8 million, the APAC losses of 0.4 million. So the rest of the group, after netting off all of the central costs, still delivered a profit of 1.9 million pounds. We had one-off costs in the Middle East of 0.6 in closing out those offices. We made a provision of £1 million for the onerous lease on the Haslingden head office, which we are going to vacate, given its size and the fact that it's not used anymore. We had some share options relating to a legacy employee that were exercised during the year. And we did have a tax charge, even though there's an overall loss. Certain pockets of the group, the UK, as I've just said, are profitable, so we do have a tax charge, which is how we get to the 2.9 overall. Next slide, please, Hannah. I'll take you just through a split of the regions. Europe and the Americas revenue increased to 35.1 million. Segmental profit for that region actually reduced from 4.9 to 3.9, and Mark's just going to explain a little bit more about that.
Yeah, no, one of our business is very much linked to its people. We unfortunately, in a couple of areas of our business, had in fact 3 people during the year who had some fairly significant health issues, 2 of which were forced to leave the business as a result of that, and we've had to look to reorganize their workload, complete commissions differently, and to backfill those positions where we can. I'm pleased to say that we have been able to do that. One of the 3 has in fact returned to work and made a decent recovery. So the blip there in our profitability in Europe and Americas relates mainly to those couple of health issues that occurred in the year.
Thank you, Mark. Headcount increased in the year to 246, and utilisation remained fairly flat at 71.9. Next slide, please, Hannah. In the Middle East. So the revenue fall there to 8.1, a segmental loss 1.8 that I mentioned earlier. The big reduction in headcount down to 35, and utilisation was very low, but that's as a consequence of the restructure and the team leaving. Moving on to APAC, please, Hannah. Revenue slightly lower at 3.7, $500,000 loss, headcount reduced to 21, and utilisation actually there remained fairly flat even with the restructure, but still fairly low for the group. Next slide. This is just a different way of presenting the movement in profit from the earlier slide. I'll take you through each of those. It's just a different way of showing it. Next bridge is the next slide, please, Hannah, is the cash flow bridge. So the movement in working capital there is the largest movement, and that's a rise, and that's really jumps out because we have the £1 million onerous lease is in there, and then we've got the adjustment for leases. We paid tax of £1 million, dividend of 800,000, buyback of 500,000, marginal interest, capex of 600,000, which is the new ERP system, and a small rise there on foreign exchange. That total the closing cash figure of 4.9. Sorry, Hannah, next one.
Yeah, we're ready for that one now. Thank you. So in terms of a summary, the main first point to make is this Middle East reset. And to give you some idea of scale, a couple of years ago, we had well over 125 people in the Middle East consistently. That's now down to 35, which is a massive change of focus and approach to that region. We have, in so doing and in exiting some of those people, we also managed to get some advance payment of debts there, which otherwise would have been difficult to collect, and to reduce some other costs, including office costs. The positive news in terms of that region now is that all offices have reported all offices in that region have reported for the current year, for Q1, a profit. And in fact, we are ahead of budget in that region. There is a ramp up in budget throughout the year, but it's the best start to the year that we could possibly have hoped for in a region that's caused us all kinds of challenges in the past, which gives us some confidence that the decisions we've made there have been the right ones. We have a decent cash position, and throughout the year, we also returned 1.3 million to shareholders via dividends and a share buyback program that we undertook over the summer. And we still have a year-end cash balance of around 4.9 million, which is a very positive place to be and allows us to fund the business without being in debt. Our Q1 figures show a return to profit, and we expect this to be a profitable year. We've improved cash. We've made some significant inroads into recovering older debts from the Middle East that were legacy problems. It's not complete yet. There's a bit further to go. We made some really significant progress in doing that. Current focus for us is all about cost-saving measures and keeping our staff busy, keeping our staff in terms of retaining them, getting our cash collection up and keeping those overheads down. Part of this is that we've invested heavily over the last year in installing a new business ERP system. We're starting to see that provide figures much more quickly. And as we move forward and get better at using it, we'll be able to get dashboards giving much more timely information to management to make decisions. And in some cases, we hope to get to live data to be able to work from and make the best decisions we can in keeping that downtime to a minimum, utilization up. And those are the key KPIs that drive profit. So that concludes the sort of formal part of the presentation. The next slide invites you to provide some questions. So please feel free to do so.
Thank you to you both. And we do have a number that have already come in. So I see some geographies had significant changes in revenue since 2001, namely Germany up close to 70% and Korea up 300%. Whereas KSA down 37%. Can you discuss each briefly with the opportunities over the next 12 months?
Yeah, I mean, the business in Germany has grown quite steadily. Some of these and will hopefully continue to do so, which is great. When you see a 300% rise in KSA, that could, or Korea, I think that was, inevitably that is probably one person turning into three. So it perhaps in percentage terms looks much more significant than it may have been in real terms. So those parts of the world have been adjusted and have been altered, but they're certainly in line with our business plans.
Thank you. You mentioned there on the last slide the benefits of the ERP system, which is now in place. Can you give some more colour on the benefits that you expect to see?
Yes, I suppose at the moment it's all about accurate time recording. We've used it as an opportunity to re-educate all of the fee earners as to why it's important for us to have accurate time recording, not only for invoicing, but for future estimating as well. And because that's more real time, we now have on a weekly basis an accurate report of utilisation, and we can see easily where the gaps are and fill those in with work from other parts of the group. So that's helping towards the being a global integrated business and also increasing the utilisation. And then going forward, there are it's really real-time dashboards that we're looking for to help us manage the business.
Can you confirm, has CapEx now been completed on that project, or is there any more to come?
No, there's a bolt-on piece of software that will help us with some of this real-time reporting, but that's not a material amount.
Thank you. And you mentioned utilisation there. What's the sort of longer-term goals for the business in terms of that utilisation rate?
Well, we see ourselves pushing through the 70s and getting as close to 80 as we can across the board. That's very much a global figure. There are some people in the business that are 100% utilised. There are others who have management functions that take a significant part of their time. But on a comparable like-for-like basis across the board, we'd like to get as close to, and ideally have it starting with an 8 where we can.
And what's your time frame for achieving that, Mark?
It won't be this afternoon, Hannah. I think that it's probably likely that we will get there over the next couple of years, but there's some fine-tuning to do of our resources in order to do that. So perhaps in a future presentation, we'll be able to set out more of a timeline as to when those plans can come to fruition.
Thank you. What's the cash flow impact of the onerous lease provision, and when can we expect to see a benefit from vacating these premises?
The benefit is already in Q1 because we haven't had any rent through for that period. We took it all last year, and whilst the finance team are still there, only at the proportion of the space that they're using, and so we're already feeling those benefits. Hasn't had a cash impact yet because we're still negotiating with the landlord for an early exit. So we're currently still paying rent quarterly as normal.
Okay, thanks. Cash collection from the Middle East. see you've already got 1.85 million back from the aged debtor book. How much more is this to collect, and how long will it take to benefit the cash flow?
There are a few dotted around, but really, I suppose I would talk about two in Oman that we've still got that are around £1 million. Whilst they are relate to a previous period, the conditions that were attached to them didn't allow us to invoice them until very recently, which we've now done. So we will now be able to start chasing those in the hope that, given the region where it is, it's probably still going to be 6 to 9, but at least it's much more on the radar than it has been before.
I guess segueing on from that then, how do you ensure you no longer rack up receivables for work done where customers are difficult or even decide not to pay?
Well, we have weekly debt calls with every jurisdiction within the group and go through them one by one. And we have been known to stop work if invoices haven't been paid, asking for advance payments. But in regions like the Middle East, if you've got government-backed debt, it's fairly safe. It just might take a while to collect. It's very safe. It's going to take a while. So we just have to take a judgment on those. Okay,
thank you. Are there particular sectors where you see bigger opportunities?
Sectors, I think probably not as much in terms of anything that sticks out. I think we're seeing opportunities come from clients that are Korean based that involve engineering projects, for example, power, also civils projects, road and rail, and some building projects. We're seeing infrastructure opportunities, particularly in South America, some mining and other projects as well. The work that we're seeing come from Saudi Arabia are large scale construction projects, probably not necessarily just infrastructure, but there are a number of quite spectacular projects that will be coming out of that region quite soon.
Okay, thank you. In view of the level of cash, is the dividend safe moving forward?
I don't see why not. It's in our forecast. We've approved the interim dividend for the current year. Whilst we continue to monitor the cash, it's fairly in a strong position at the moment.
Thank you. And I think leading on from that, one gentleman has a question. Is there a shift in policy to pay dividends quarterly?
No.
Thank you. Are you seeing any step changes in the size of opportunities and commissions? You noted some large ones in Saudi Arabia and South America.
Yeah, I mean, last month, it's fair to say that large commissions, as part of our governance, tend to come to us to talk about and to sign off on before we put bids in for those proposals. And normally we would have perhaps at any one time, maybe $1 million plus commission to look at. Last month, there were in fact 4 in the business that were being reviewed. I can't say hand on heart that we'll get 1 or 2 or any of them. But what I can say is that with an increased opportunity pipeline coming through the business, you can see that would underline management confidence in being able to secure business plan levels moving forward.
Thanks. This one's probably a little more for you, Charlotte. Obviously now you've had an opportunity to get your feet under the desk at the business, and will the publication timetable of results perhaps speed up a little?
Yes, absolutely. We're intending to revert to the previous timetable, so it would be December. We're aiming for the year end, June for the interims.
Super, thank you. Have you given any more thought to the buyback of shares, given the cash balance and return to profitable trading?
Yes, I think we as a board will constantly bear in mind the timing of and the opportunity to do buybacks, as well as our in parallel with our dividend policy. That also is a function of what we consider the price to be, the share price to be at that point in time, as well, and what we also need our cash balance to be. So the short answer is yes. I don't think we've certainly not done our last buyback. I'm sure of that.
Thank you. I think perhaps I think this question gives you an opportunity to speak to the larger question of staff retention, and certainly, you know, you highlighted there in the presentation about Diala's and how the building of that team was a great triumph for the business, and that those members, the people that you hire there, were in high demand. And the question here also relates to share options and paying them out to exiting employees, whether there's an opportunity to withhold that to incentivize, you know, perhaps lower churn rates. So can you speak a little bit to retention and to share payouts for leaving members?
Well, dealing with that particular question, I think the first thing I would say is the only significant payouts that I'm aware of that type relate to my two predecessors. It is absolutely not our policy to make significant payments to exiting employees unless there is a clear contractual reason to do that. So we will, the first thing we need to do to bring experts into the business is make sure we're paying a decent marketplace salary. We also need to give those people the opportunity to earn a bonus as part of that setup as well. And then on top of all of those kind of very much financial things, we need to make sure this is a workplace in which those people will want to work. We want them to be able to work with the best possible colleagues in the right working environment. We want them to know that their career, if they're a younger person and they're looking to develop into an expert, we want them to know that we will actively take part in making sure that career development plan is in place and is actioned. I'd say more than 40% of the expert team have been developed into testifying experts during their time at Driver. I don't know any of our colleagues in other businesses that are competitors could say that. So we've developed a few careers. Equally, if you come to Driver as an existing practicing expert, we have a marketing team that will spend quite a lot of time and energy helping you raise your profile to the law firms across the world, and to make sure that your profile is out there and you're properly supported in developing your reputation as an expert. So there are quite a few things in the process of attracting and retaining talent other than just money. We do have a share retention LTIP arrangement in place. And if people are entitled to some of those results, then they're entitled to them, but they're all calculated on the basis of a value add to the business. They're certainly not just gifted to people.
Thanks for clearing that up. Now, this is one I know we've had probably for the last 18 months on rotation, but still relevant, I'm sure. The COVID-related flood of business. Do you still see the ongoing impact from that in terms of disputes needing to be settled, or do you think the flood of work might have been overstated?
I think that we have seen a chunk of COVID-related issues that have been, particularly where they're with government contracts, that have seen a negotiated outcome rather than a more formal dispute. Equally, we are still seeing come through the business on a daily basis claims that relate to the delay and additional cost and disruption caused by COVID. So it's perhaps more of a steady pipeline than a surge, but we're still seeing that come through the business now. Equally, we're also seeing a number of disputes that we know are on hold due to the situation in Ukraine and with Russia as well.
Okay, thanks. Is there a major difference in gross margin between the divisions?
Yes.
Would you like to expand on
that? We have a margin in our project services business, which reflects people that are on long-term secondments so that we can manage that quite effectively, and they're on a day rate, so less downtime but a lower rate. I would say margin wise probably about 20% gross, something of that nature. For an expert type commission at the top end, that might be closer to something in the 40s, early 40s, and for the driver trep business somewhere in the middle. So that's the kind of range of gross margins. Okay,
and what about utilization levels?
Well, that does vary. If you're on a project services project, you're probably going to be 100% busy for a long period of time, and then 0% when that comes to an end and you're looking for a new job. Equally, many of the experts and many of the driver tret employees will juggle 5 projects at any one time that are at different phases in order to try and fill their utilization. But it does vary across the piece from time to time, depending on the mix of workload. Okay.
Obviously, we've seen a fair bit of churn across different management teams in the different regions. Do you see the need to change up any of the management teams and the officers in the forthcoming period?
No, I'm not sure I would, even if I was, I'm not sure I'd advertise it publicly. We are fortunate to have some great people in America working for us that have started under very difficult conditions in a pandemic and helped us build a business from scratch. Our UK management team, many of them have been with us significantly more than 10 years and deliver very well. Our European team under Hugo have done great things in terms of achieving every year a regular, steady growth in the business. So that's been good as well. The people, I wouldn't say it was churn in the Middle East as much as an exit, frankly. So that's a team that we needed to exit. Anyway, as it was, an opportunity presented itself to do that as painlessly as possible. We managed to negotiate something that was appropriate for that. We have put back into that business management that is known to us and has been for a long time. So we've got some real faith in that. We did make a change in the year in our APAC management team as well, which is very competently led by Muckle Sol down in Australia. He's a very bright guy and has a great future with the business. And I know we can rely on to deliver results in APAC.
Okay, thank you. A few little nuts and bolts. How has the company incurred a large derivative liability?
It's linked to legacy intercompany balances for the overseas offices. They've been in place for at least 5 years. Lots of them are linked to the dollar. Lots of the currencies are linked to the dollar, which the rate decreased quite rapidly from sort of last April. They matured 6 monthly, and at the year end we had a liability, but then we rolled them over, and actually we've very recently closed them out at not far off what that liability was, and we're not currently seeking to replace them, and instead do some tidying up those intercompany balances so that we remove the need for them.
Thank you. And finally, what is the timeline for getting forecasts into the market?
We have our AGM in a month's time in March. We have a new chair joining us. We have some board meetings that are planned around that time, at which this particular topic will be discussed. And at that point in time, we will also have visibility of where we think we might be for H1 as well. So I'm not going to give a firm commitment of a day, a minute or an hour in which we will be doing that. But I think you can take it from that, that it might not be too long before you hear from us on that front.
And us neither. So as soon as we have some to issue, we shall be popping out an email. So thank you both for your time. It sounds like there is great momentum. And so we look forward to another update at the half year numbers.
Indeed, look forward to seeing you then. Thanks, Anna.
Thanks, Anna.
Thanks.